Hey, future CPAs. Look, if you're feeling that intense LECPA pressure weighing you down right now, I completely get it. The Philippine tax code is absolutely massive, and trying to just brute force memorize everything at once, yeah, that's a one-way ticket to burnout. So today, we're not just doing a standard review. We're actually going to hack how your brain processes this stuff. This explainer is built as a cognitive memory hack to help you truly master tax Situs. We're aiming for that deep, 3-year long-term retention you need to absolutely crush the boards, not just pass tomorrow's quiz. Let's get into it. So here is our battle plan to build your mental schema and completely avoid cognitive overload. We'll hit 1. Tax Situs, the golden rule. 2. Taxpayers, who pays what? 3. The 50% predominance test. 4. Domestic stocks, absolute rule. 5. Cross-border allocation. And finally, 6. The ultimate LECPA bullet review. All right, starting us off with Section 1, Tax Situs, the golden rule. Okay, so tax situs is, at its core, simply the place of taxation. The source of an income is defined by the specific property, activity, or service that actually produce the economic benefit. I want you to think of situs as your ultimate anchor. It's the jurisdiction that holds the right to tax based entirely on where that economic benefit actually went down. Basically, if the magic happened in the Philippines, well, the Philippines has the right to tax it. Now, what's really cool here is how inherently logical this all is. You just match the income to its physical or legal anchor, which means your brain doesn't have to just aimlessly memorize things. For interest, your anchor is the residence of the debtor. For royalties, it's the exact place where that intangible is actually being used. Rent, just picture the physical location of the leased property. Services are taxed at the place of performance. And real property is obviously the location of the property itself. Connect the income to its anchor, and there's no way you're forgetting it on exam day. Moving right along to Section 2, Taxpayers. And who pays what? Okay, lock this baseline rule into your head right now. Look at the board. Only resident citizens, RCs, and domestic corporations, DCs, are taxed globally. They are literally the only ones facing global exposure. Every single other classification, non-resident citizens, resident aliens, non-resident aliens, whether engaged in trade or not, and all foreign corporations, they are strictly territorial, meaning they're only taxed on income derived from within the Philippines. So memorize those two exceptions and let the rest fall into default territorial logic. Next up, Section 3, the 50% predominance test. 50%. I want you to burn this number into your memory right now. It represents the 3-year gross income ratio you need to trigger the predominance test for foreign dividends. See, if a foreign corporation pays out a dividend, the Philippines wants to know if it gets a slice of that tax pie, and that entirely hinges on this magic 50% threshold. This perfectly illustrates the kind of algorithmic thinking you need for the board exam. Step 1. Test the 3-year history first. Calculate the foreign corporation's Philippine gross income versus its worldwide gross income over the past 3 years. Step 2, if that Philippine income is strictly less than 50%, boom, the dividend is treated as entirely without the Philippines. But Step 3, if that Philippine income hits exactly 50% or more, the dividend is considered partly within the Philippines, determined by whatever that exact ratio happens to be. All right, time for a quick pattern interrupt to force some active recall. Pause for a second and lock in your guests before we move on. Where is the tax situs if a non-resident alien sells shares of a Philippine domestic corporation while they're on vacation in Japan? Think about your anchors. Let's see if you got it. Section 4, Domestic Stocks, the absolute rule. Here is your mnemonic hack to keep forever. DC shares never leave home. It literally does not matter who sells them, even a non-resident alien, or where the transaction physically takes place, even while they're sipping matcha in Japan. The situs stays right here in the Philippines. It is always treated as income derived completely within the Philippines. This is an absolute rule, guys. 0 exceptions. Okay, diving into Section 5, Cross-border income allocation. Do not let the math freak you out. Breaking this down prevents cognitive overload. Step 1. Just take the total taxable income and split it right down the middle into 2 halves. Step 2, allocate the first half based on property location using the property value ratio. So Philippine value over worldwide value. Then Step 3, allocate the second half based on sales location using the sales value ratio. Philippine sales over worldwide sales. Half for property, half for sales. Keep it that simple, and that's how you conquer cross-border allocation without panicking. Let's do one more active recall hook to test that 3-year retention we're building.
Apply the predominance test you literally just learned. If a foreign corporation pays out dividends, but only 40% of its total gross income over the last 3 years was from the Philippines, what is the tax situs? Got your answer? The answer is entirely without, because 40% is less than our 50% threshold. If you nail that, your brain is absolutely building those long-term pathways right now.
Which brings us to our final stop, Section 6, the ultimate LECPA bullet review. I really want you to take a mental picture of this slide, or honestly, just take a screenshot right now. This heavily synthesized list is your ultimate deal-breaker review. Let's trace it one last time to lock it in. Resident citizens and domestic corporations are taxed on global income. All other classifications are strictly territorial. Interest is anchored to the residence of the debtor. Rent is tied to the location of property. Services are anchored to the place of performance. Foreign dividends trigger the 50% predominance test based on that 3-year ratio. And DC shares are always within the Philippines. Take a deep breath. You just processed some of the most heavily tested tax situs rules in the Philippines setup, and you did it by building a structured, highly logical schema. Validate the effort you just put in, because it's huge. Now, think about this. If you can master how your brain categorizes these specific situs rules today, what other highly technical tax codes can you unlock using these exact same active recall hacks? This structured approach? This is exactly how you build that 3-year retention to completely dominate the LECPA. Keep using your anchors, keep interrupting your patterns to test yourself, and I promise the tax code won't seem intimidating at all. Keep up the incredible work, and I'll catch you in the next explainer.